Hi, welcome in everybody. Just gonna give a couple minutes for folks to filter in. But in the meantime, if you guys want to just introduce yourselves in the chat, let us know where you're joining the webinar from. That would be awesome. You can also put in there what type of business you have too. I'm Elizabeth and I am in Florida and it is getting very hot here. We're about to head into summer. Okay, so we got Minnesota, Washington, somebody else from Florida. Yep, we're live right now. Just giving folks probably another minute or so to settle in. Wow, we got people from all over, huh? Bunch of California, somebody from Hawaii. Let me know if you want to trade places. Connecticut, more Florida. Awesome. Perfect. North Carolina, South Carolina. All right. Well, hi, Angela. We have the same last name. Yes, it is being recorded, Charlotte, and we can send out copies of the recording. All right, folks, I think we're good to go ahead and get started so we make the most use of our time today. So my name is Elizabeth Mullins. I am a member relationship manager here at Collective. I'm also an enrolled agent through the IRS, so I am a credentialed tax professional. I've been with Collective for almost 4 years now. I spent a lot of time over in like the marketing and sales world, and now I help our members directly. So, a couple of housekeeping things just before we get started. As far as questions, this is a great platform to ask questions on, and we will have some time at the end for Q&A. If you can, just try to make sure that your questions go into the Q&A, or you can put them into the chat. All right. So as far as our agenda today, we're going to go over common mistakes that self-employed people make and how you can avoid them, payroll and S Corps and why that is important, how to stay compliant with the IRS to reduce penalties, and then common myths about S Corp that might be costing you money. And then lastly, we'll just talk about how Collective can help save you money on taxes. This webinar is for educational purposes only, so nothing contained in this or any related webinars should be viewed as legal or tax advice. Always consider consulting a professional directly if you need legal or tax advice in operating your business. So what exactly is Collective? We're actually the first all-in-one financial platform designed for self-employed people. So we have a package that we'll talk about in a little bit that kind of lumps a bunch of services into one to make it as easy as possible. And we are self-employed experts. So let's talk about some mistakes that self-employed folks make commonly and how you can avoid them. So oversights that can cost you money and time that we see often are mixing business and personal finances. The IRS really wants you to have separate business and personal finances. They call it commingling when everything is mixed together. And honestly, it does make it a little bit harder on you too, because while it does take a little bit of time to kind of set up the separation between your business and personal, it makes things a lot easier ongoing for you as a business owner. You're going to have a lot clearer picture of your finances if things are separate and you know exactly what's business and what's personal. not optimizing your business structure. So that's something that we do here at Collective, and part of our initial process is we learn about your business and see if there's any optimizations there. Like if you could qualify to be an S Corp and that would be a good fit for you, that can be a more tax efficient business structure for you. Ignoring payroll compliance or other types of compliance. So just keeping yourself in compliance typically is going to help you avoid any type of penalties or just stress that you would experience, and then not submitting estimated tax payments. So that's something else that can kind of make things a little bit more stressful for you and also cost you money, because if you're not submitting estimated tax payments regularly and you have a requirement to, and anybody who is self-employed that's going to owe more than $1,000 when they file their taxes has a requirement to pay quarterly payments throughout the year. If you don't do that, you will get assessed some either failure to prepay penalties or late payment penalties, underpayment penalties. There's a whole host of penalties that they can assess if you're not making those payments as you should. So these are four of the most common ones that we see that end up, kind of making things a little bit more stressful for you in the long run and costing you money. So here's how to avoid them. Let's talk about these a little bit more in detail. Mixing business and personal finances. So why it's a mistake is, like we talked about, there's not really a way for you to have a clear picture of your business finances if everything is all jumbled together like a big bowl of spaghetti. So you can be missing deductions. It's costly to get your books cleaned up if you've been commingling and everything is all jumbled together. So it's definitely better to open a separate bank account specifically for your business. Keep everything separate. Implement the use of an accounting software. So a lot of folks that come to us have been using QuickBooks, FreshBooks, whatever works for you, whatever your choice is, that's going to help you stay organized. That way you can link that to your business only bank account, have those transactions pull in, and you can have an idea of what's coming into your business and what's going out. Now you can do that process, that accounting, bookkeeping, reconciliation process yourself, or you can hire a professional bookkeeper to do it for you to save you time and effort, because it does get a little tedious. Not optimizing your business structure. So why it's a mistake is you could be overpaying in self-employment tax. You could also be missing out, like if you're just a sole proprietor, you could be missing out on liability protection by not having an LLC, or setting yourself up for S Corp status as well. So how to avoid it would be to understand your current structure, making sure that it is the best structure for you to be in, knowing your options. So just as your business is growing and evolving, reviewing your structure as you grow to ensure that your structure is aligned with your financial goals. And then a pro tip for this one would be to consult a self-employed advisor just to make sure that you are in the best structure that you currently can be for your business. So ignoring payroll compliance, this one is S Corp specific, because a sole prop or just a regular LLC wouldn't have a payroll requirement. So why it's a mistake to ignore payroll compliance when you're an S Corp would be that missed payroll tax returns trigger penalties and interest. Not paying yourself a reasonable salary as an S Corp typically results in audits and can result in additional tax penalties. There can also be, more serious consequences to that as well. So it is a really important aspect of having an S Corp. And how to avoid it would just be to make sure that you're using payroll software to automate your payroll returns. I have done manual payroll runs in the past, and it's a nightmare. So I don't recommend anybody do manual payroll. There's so many payroll softwares out there that are affordable, that are a great alternative, that are just going to make your life super, super easy. So that would be our pro tip here is to definitely get a payroll software, use that to automate everything. And then you're going to want to also reassess your reasonable salary annually because it is something that is tied to labor. So that there's a lot of components that go into calculating reasonable salary, and your income is definitely one of those. So you just want to make sure that you're kind of like in the sweet spot there with your reasonable comp where you are getting optimal tax savings, but you're also in compliance with the IRS, or maybe you have other financial goals coming up, like you want to eventually purchase a home and be able to qualify for lending. You can adjust your reasonable salary accordingly. If your mortgage advisor says, hey, you need X amount on your salary, that's something that can help you as well. Not submitting estimated tax payments is a big one. So why that's a mistake is you're going to have, if you're not paying throughout the year and breaking up your liability, you're going to have a huge bill at tax time, or at least a bigger bill than you would if you've been spreading it out throughout the year. So that can always feel pretty bad when you file your taxes and you see a huge bill. You also have an increased risk of penalties for failure to prepay or underpayment penalties and associated interest with those. So what you would want to do to avoid that is just mark your calendar for your quarterly tax estimated payment due dates, which are going to be April 1st for the first payment, April 15th for the first payment, June 15th for the second payment, September 15th for the third payment, and then the fourth payment is going to be due January 15th of the following year. So those are really important dates to remember. And if they do fall on a weekend, like this year, the June 15th date for the quarter two payment falls on a Sunday. So the deadline for the quarter two payment this year is actually June 16th. Calculate estimated taxes and pay in quarterly. We do have some resources as far as like the best way to calculate your estimated taxes, but the easiest way to really do it is to kind of just you can either take your income for last year. This is how most CPAs will tell you to calculate your estimate. It's called the safe harbor method. You can basically look at your tax return that you filed last year, see the total amount of tax. You can just divide that by 4 if it's under $150,000, and then pay that in quarterly throughout the year. That'll help you avoid penalties as long as you're paying that in. If you made over $150,000, then you will times it by 110% and divide that number by 4 to get your quarterly payment amount based on the safe harbor method. Or you could take the amount that you're projecting to make this year, multiply that by 30% roughly, and then divide that by 4. And that's also a simple way to kind of calculate how much you should be paying in each quarter. I always tell everybody paying in something is always better than paying nothing because it does help you avoid penalties. So even if, the amount that you calculate is higher than you can currently afford, paying something towards it is going to help you out in the long run. And then you can also automate savings for taxes in a separate account. So a lot of our members will kind of sock away some money for their quarterly estimated tax payments in like a business savings account, just to make sure that they have that kind of like the buffer or the cushion there when it comes to quarterly tax payments. So it's not so much of a burden on you when the time comes. Okay, so we talked briefly about payroll and S Corps. Let's talk about why payroll is really important. So, number one, it's a requirement from the IRS that if you have an S Corp, you do have to pay yourself a reasonable salary. And it's because there's no self-employment tax on your business profit with an S Corp. So the payroll is really the mechanism that drives the tax savings with an S Corp. And this method of paying yourself a reasonable salary, where you pay payroll taxes on your salary, but you don't pay that 15.3% in payroll slash self-employment taxes on your business profit, can help you lower your overall tax bill compared to just like sole proprietor or LLC taxation. When you're taxed as a sole proprietor or LLC, you're considered to be a disregarded entity. And disregarded entity taxation is just all goes into one bucket. It's all characterized as net income from your business. And on that amount, you pay 15.3% flat in self-employment tax. And then you pay income tax on everything at your ordinary income tax rate as well. With an S Corp, your money is characterized in two ways. So it kind of goes into two different buckets. You've got your reasonable salary in the first bucket, and you pay income tax on that amount, and you also pay payroll tax at that 15.3%. It's the same thing as self-employment tax. It's just the Social Security and Medicare tax. And then on bucket two, you have your leftover business profit. So everything that's not on your reasonable salary is considered leftover business profit. This is after your other business expenses as well. And with an S Corp, on that portion, you're just paying income tax at your ordinary income tax rate. So instead of paying 15.3% and then income tax on everything, you're still paying income tax on everything. Uncle Sam won't have it any other way, but you're only paying that self-employment slash payroll tax on the payroll portion. So it's definitely, for some folks, a more efficient tax status. So because you're both the owner and the employee, you have to run payroll and pay yourself a reasonable salary. Again, it's the IRS that requires that. But the good news is that your salary is a deductible business expense for your business. So Social Security and Medicare only on your salary. So like we just talked about those two different buckets. Now with an S Corp, only your salary would be subject to those FICA taxes, the Social Security and the Medicare tax, instead of your entire business profit. And income tax applies to both salary and profit. So like we talked about, again, you pay income tax on everything, but the S Corp structure reduces the self-employment tax. All right, so let's look at a savings breakdown of a business that's making about 160K. So in this column on the left here, this is going to be somebody who's being taxed as a disregarded entity, so a sole prop or a single member LLC. And the right column is somebody who's being taxed as an S Corp. So the business profit is going to be the same. It's $160,000. The sole proprietor single member LLC does not have a requirement to pay themselves a reasonable salary. So that is NA here. The S Corp owner is paying themselves a $60,000 salary. So as far as the owner distribution for the sole proprietor single member, basically what they're taking their owner's draws throughout the year, is going to be this $160,000, whereas the S Corp owner, since they already have $60,000 on salary, they have $100,000 available left over to take distributions of. The amount for the sole prop or single member LLC that's going to be subject to the self-employment taxes, that 15.3%, like we just talked about, is going to be the whole entire amount. Whereas with the S Corp, it's only the reasonable salary that's subject to the payroll taxes at 15.3%. So instead of paying over $24,000 in self-employment tax with a sole proprietorship, single member LLC, disregarded entity, whatever you want to refer to it, this person could switch to an S Corp and save over $15,000 a year, just in self-employment tax savings. And I don't know about you, but I can think of a lot better things to do with $15,000 than to keep giving it to the government. So that's basically just how this works. If this helps visualize, again, it's just you're still going to pay income tax on everything, but it's the self-employment taxes where you save with an S Corp. All right, so let's talk a little bit about how to stay compliant with the IRS to reduce penalties. Keeping your LLC status in good standing is very important. That just means that your LLC, which is the underlying legal entity of your S Corp, requires an annual report and in some cases an annual fee in most states. So you'll just want to mark your calendar with the state filing deadlines and make sure that you're renewing your LLC on time each year. You'll also want to maintain clean financial records. So business income and expenses should be tracked separately from personal funds, like we talked about earlier. One of the best ways to do that is to make sure that you open up a business bank account, that you track everything separately and you try to keep your finances as separate as possible. Credit card as well. That's also something that can be separated. Just to make things easier. Again, use of an accounting software is going to be the best way for you to track and categorize everything throughout the year. So that way you as a business owner can have a clear financial picture. With an S Corp, you've got to pay yourself a reasonable salary to be in compliance. So you have to pay yourself as an employee, and your salary needs to basically meet the IRS's requirements and match industry standards. You'll want to use a payroll software to set up and automate regular salary payments. So we really love Gusto. We're partnered with them, but you can use QuickBooks as well, or really any other payroll software. With an S Corp, you'll also have to file Form 1120S annually. And what that means is it's just a separate tax return. Your S Corp has its own individual business return that gets filed to the IRS every year. The due date for that one is about a month before the personal return is due. So the S Corp return is due by March 15th, and then you've got a month until April 15th to file your personal return. The 1120S is just an informational return. So there's no type of like corporate income tax that your S Corp has to pay. It's a pass-through structure. And that just means that everything passes through to you as an individual. So yeah, those things will help you stay in compliance. And now we've got a quick poll. Would you want to meet with a collective advisor after the webinar to see how much your business could save with an S Corp? So go ahead and submit your answer, and then we'll move to the next slide. All right. So now let's talk about some common myths about S Corps. And if they are costing you money. So here's some common myths. Number one is going to be that S Corps are only for big businesses. The truth is that S Corps are perfect for small to medium-sized businesses. And actually, 97% of S Corps are owned and operated by less than 3 people. So even if it's just you in your business and you're a solo entrepreneur, it may be possible that you could benefit from S Corp tax savings. And why this myth would cost you is because you could be losing out on self-employment tax savings just because you think that my business is too small for this. It's just me. I don't have any employees. You really don't need to in order to save money with this business structure. The second myth is that the reasonable salary is a suggestion, not a requirement. So the IRS reasonable salary that goes through payroll, like we talked about, it's a requirement of being an S Corp from the IRS. So it's a direct IRS requirement. It's how they collect those Social Security Medicare taxes when you're an S Corp, the FICA taxes. So if you fail to meet the reasonable salary requirement, it can actually result, you know, how I mentioned, I alluded that there was more serious consequences. Even what they could do is they could actually come in and recharacterize any funds that you've taken out of your business as distributions, as wages. You will be responsible for paying back all of the back payroll taxes on that. And the IRS could actually revoke your S Corp election. Um, and you won't be able to re-select that entity for a 5-year period, not to mention additional penalties and interest that they would throw on to that as well. So very big requirement. Can be very, very serious consequences if you don't adhere to that one. Another myth is that an LLC somehow saves money on taxes. Single member LLCs are just taxed the same as a sole proprietor. It's referred to as what's called a disregarded entity, and it sounds exactly like it is. The IRS just completely disregards that there is an entity and continues to tax you as a sole proprietor. So if you are a single member LLC and you're looking for tax savings, you would need to elect S Corp status to unlock those self-employed tax savings. And how it can cost you is staying in an LLC instead of making the S Corp election can again just mean that you're paying more in self-employment taxes than you realistically need to. The last myth is that S Corps are complicated and expensive. Now, I am not going to deny that it is a bit of a more complex business structure than just a sole proprietorship, but with the right support, an S Corp can be simple and cost effective, getting you tax savings that you would otherwise be missing out on. Again, avoiding this just means missing out on potential tax savings and continuing to pay more to the IRS every single year. All right, and then let's talk quickly just about how collective can help. So, like we just talked about, most of those things resulted in just more taxes for you, just having to pay more and more throughout the year. So, collective handles your back office so you can focus on growing your business. The things that we handle for you are going to be S Corp setup. We can also help you set up an LLC if you're a sole proprietor and you don't have one. We can start from the ground up, form your LLC, and then elect S Corp status. We can handle your registered agent, so all of your compliance reminders. We also handle bookkeeping for you every month. So our team categorizes and reconciles your expenses and income every month and delivers reports for you. We handle quarterly tax estimate calculations and reminders, business tax returns. We also have an a la carte option for personal tax returns. We run your payroll. We provide guidance on reasonable compensation, and you do get support from licensed professionals. Oops, I'm sorry, I skipped ahead too fast. Licensed professionals like myself. So each of our members gets assigned their own dedicated account manager, which is a member relationship manager that is a credentialed tax professional. You can meet with us whenever you want. You can hop on calls with us. You can send us messages. We are there to support you. So by yourself, if you're kind of thinking of DIYing, that's totally fine. You just have to kind of cobble together a couple different services. So for tax filing, you utilize TurboTax, business formation, LegalZoom. That's their wheelhouse. They can help you get everything set up. For bookkeeping, you can use QuickBooks, and our recommendation for payroll is Gusto. Obviously, with Collective, it's simplified because it's just all in one place. So instead of having to have all of these different subscriptions and kind of trying to track everything in all these different places, Collective just handles it all in one place for you. We do have simple, transparent pricing as well. So you can either spread your payments out over 12 months and just pay monthly, or you could sign up for the annual plan. We have a one-time setup fee of $199. And that just encompasses like catch-up bookkeeping, making sure everything is specific to S Corp accounting and everything is accurate in your books. So we'll catch up the accounting and payroll if needed as well, and any business compliance. Our monthly subscription is $349 per month, or you get a 15% discount if you want to sign up for the annual subscription, and that comes out to be $296 per month. So the annual cost, if billed up front, is $35.60. All right, and here is a QR code that you can scan if you want to set up a call with one of our awesome business advisors. They can answer any questions you have and tell you more about the platform. They can show you demos. You can also get your first month for free if you sign up for the Collective this week, which is a $349 value. So I'm going to leave this up. We can move into the Q&A. So let me go over here and we'll get going. Okay, Sandy said Score is a great advisor and they are free. All right, perfect. I haven't heard of them, but thank you so much for sharing that, Sandy. Okay, wish to employ my child for his legitimate work and deduct his wages as a business expense. Will an S Corp let me do so? That's a great question, and it's one that we get a lot. And yes, you can absolutely do that with an S Corp. You can put your child on payroll. There are some things that you would want to consider, just the age of the child. You want to make sure that they are above at legal age or above to work. If they're very young, it does get a little bit difficult to kind of substantiate why you would want to hire them over another employee. You would also have to make sure that you are paying them a fair and a reasonable wage and you're not paying them like way more than you would pay another employee to do the same work. Um, those are kind of the big ones that you would want to look into, and it does need to be legitimate work that they're doing, but you already said that, so you already know that. But yes, that is a possibility. Okay, Kenya asked, when you say reasonable salary, does this need to be the same amount each pay period? I've started a new business that will not begin to generate profits for the first few months. Totally common, totally normal, Kenya. It doesn't need to be the same. In fact, we do go in twice a year. So our team will go in usually around quarter 2 and then again in quarter 4 and look at your salary, evaluate it. If there are adjustments that need to be made, like if they determine you're paying yourself too much or too little, they will let you know and we can make adjustments if you approve to get you within the recommended range. So it's something that you could definitely like, if you're not having any profits, you don't need to pay yourself. Like I said, it is tied to labor, but if you're just ramping up and you're generating a little bit of profit, you can set your salary low, and then as things ramp up, you can increase it. That's totally fine. One of my members is doing that right now. Um, what is the profit threshold above which an S Corp is a good idea? Mary Lee, thank you for the question. That's a great question. It's typically going to be above $60,000 in net profit per year. So after your business expenses, if you're above $60,000, it's definitely worth scheduling a call with one of our business advisors to kind of chat with them and just see if an S Corp may be a good option for you. Okay. I wish to deduct costs from getting a master's degree directly related to my work. Would an S Corp allow me to do so? Yes, if it is directly related to your work, um, most likely you will be able to deduct those costs. If it's unrelated, then no. But because it's related, there's a good chance, yes. Frank, how do you report vehicle mileage used? So our members report that in their accountable plan. So it's essentially like an employee reimbursement plan for S Corp owners that we have a fillable form on the platform for. So they would just go in every month, pop in their mileage. A lot of our members also, if you need a recommendation for a mileage tracking app, a lot of our members really enjoy using Mile IQ. At what point is it better to get someone on payroll instead of temp or subcontractor? That's a good question. And I'm going to give you an annoying answer, and I'm sorry, but the answer is that it depends. It really depends on the laws of your state. In general, if somebody is being paid as a contractor, but they're really performing their role as like a W-2 employee, like they have a daily schedule where they come in from 9 to 5 every day, they're not project based. They're just working for you indefinitely. Those things would kind of indicate that that person is more of an employee. But if they are a contractor and they don't have a set work schedule, they're project based, those things would maybe indicate that they would be better off as a subcontractor. But you can absolutely research the labor laws in your state surrounding this, so that way you can get more information to make an informed decision. Suzanne is asking, why would anyone want to remain an LLC and not elect S Corp status? So that's a great question, Suzanne. From what I've heard, it's really just folks that are number one, just resistant to change. And a lot of folks get overwhelmed with anything having to do with taxes or the IRS, which is totally understandable because it can be intimidating. So I think there's just a factor there of like this stuff, like taxes in general, it's not always intuitive. It's not always easy to understand. And I think folks maybe get comfortable in a certain business structure and they're like, okay, I've been an LLC for 3 years. I know what I'm doing. I don't want to change and throw a wrench in everything. And now I have to run payroll and now I might have to structure this differently. So I think it's just not having the best understanding or maybe just being a little hesitant to change. Otherwise, another reason would be like if you're making below the recommended threshold of $60,000, it may not be the greatest move because you are going to be, like I said, entering into a more complex business structure just inherently due to that payroll component. And if you're not going to see tax savings come out of that because you're below the threshold where savings would take place, then it wouldn't really be the best time to move forward into that structure. Or if it's like a really temporary situation, like say you're just freelancing in between W-2 jobs for the next 4 months, then it's probably not worth going through all the hassle of setting up an S Corp and getting yourself set up for payroll and registered as an employer and all the things that you have to do to be in compliance for like a really short term situation. So those I think are probably the three most common reasons that we've seen like low self-employed profit, just afraid to make the change and take the leap, and short-term self-employment. What is the cost for using Collective? Perfect. Let's go to that slide again, Frank. So it's right here. We've got that one-time setup fee. That's literally just us doing all of kind of the back end work, making sure everything is in compliance, getting the S Corp election filled out and faxed into the IRS, catching up the accounting and payroll. And then you can either do our monthly plan for $349 per month, or you can do our annual plan. Excuse me, that is $35.60 for 12 months of service, billed up front. That one has a 15% savings, so it's a little cheaper if you go that way, but you can always do the monthly plan. That's a great option too. And then you can always switch to annual at any time. Issa has to leave for a meeting. Yes, we can get you a copy of the recording, no problem. Suzanne, does Collective help with retirement savings? So we can definitely talk to you about self-employed retirement accounts and answer any questions you have, talk to you about the most common self-employed retirement accounts, the best options for you. As an S Corp owner, we can go over what the contribution limits look like, what the deadlines are. We can even calculate the maximum amount that you would be able to contribute to your retirement plan, but we don't facilitate like setting up the plan, or actually funding it. You would just choose whatever custodian, or provider that you want to go with and set up the plan. Like I said, we can support you, answer any questions that you have, and then once you have your plan set up, if you're going to be making like monthly contributions, you can let us know that information and our team can put it into Gusto for you for tax reporting purposes. So there is a lot of support there, surrounding retirement plans. We just don't actually create the plan for you. Um, David is asking, does electing S Corp status require setting up additional operating LLCs? Not sure that makes sense. Seems like payroll and operations could be separate entities. That's a great question. No, you don't need anything like that. It's definitely not that complicated. I totally get where you're coming from, just like wanting to keep everything separate to make the most sense. But nope, if you have a payroll software that you're working with, you really don't need like a separate entity. It's just got to be all in one. The payroll needs to be coming from your S Corp to you, David, as the S Corp owner. Good question though. Uh, Steve, yes, you will receive the recording. I believe Sarah usually sends them out like 24 hours after the webinar. Um, Jennifer, how do you decide the fair and reasonable wage for myself as an owner of a restaurant? That's a great question as well. So there's a lot of factors that go into calculating reasonable compensation. Some of them are going to be just how much the business is earning, where the business is located, the type of work that you're doing for the business, and industry standards, of course, play a role in that as well. So that's something that our team generally, like in onboarding, they help you they calculate a reasonable range for you where you can kind of choose within that range an amount that you'd like to pay yourself on your reasonable salary. And then, like I said, the team keeps an eye on it throughout the year here, and we make recommendations throughout the year. Um, my S Corp is at 10 years in June. I've never filed under it. Do I have to reinstate my S Corp in June? That's a good question, Shailene. So when you mean that you haven't filed under it, do you mean you've never filed taxes, like a return as an S Corp? Have you just still like you've had the S Corp, but it's been kind of like dormant, and you've still been filing under like your name and social? Um, if so, and if you've never been doing like your annual reports and stuff with the state, depending on the state that you live in, let me know what state you live in, and I can let you know your S Corp may have been like administratively dissolved. But if it is, in those cases, you can typically like go online, and reinstate them. So you can find that information. You can look up your business name with the Secretary of State for the state that you live in, and it'll tell you the status right there. Like it'll tell you if it's active and good standing or if it's been administratively dissolved. If it has, you just want to contact the state and find out what you need to do. Usually it's just filing any past due annual reports and pay any fees that you would need to pay, and that usually gets it back up and running. Um, I will be primarily working for a loan signing service, but occasionally do work on my own. I don't see my income being over 20K per year. What will work best for me? S Corp LLC. Thanks. Hi, Donald. So is the primary job for the loan signing service like a W-2, it sounds like, and then occasionally you take on like side work. If you think your side income of 20K, which is that's a great side income, congratulations. If it's not going to be over that threshold, then yeah, you probably just want to stay disregarded entity taxation. So if you do want the liability protection, a great option would be to set up an LLC. So you have that liability protection. If you don't need it, if that's not really a concern for you in your line of work, then you can just stay a sole proprietor. An S Corp, um, most likely wouldn't really be worth it with that level of income. Is it too late to open an LLC with the S Corp tax option for 2025? How can it be done if still possible? So, great question. It's not too late. You can still form an LLC and elect S Corp taxation. The only thing to keep in mind is that your S Corp election date cannot predate your LLC formation date because you do need that underlying legal entity, the LLC, to be in place in order to have an entity to elect S Corp taxation. So if you form your LLC June 10th, your S Corp election date would be your LLC formation date of June 10th. So it's totally still possible. It would just be kind of a wonky year, like a split year where, if you've been operating your business for the early part of the year as a sole proprietor, you would need to file kind of like a tax return, like two tax returns basically, where you file a Schedule C for your sole proprietorship activity from January through June, or the end of May, and that in this example, and then collective would file the S Corp return for you from June to December. And then the next year would be all S Corp business activity. But this year, it's definitely not too late, but it's just a like half year S Corp basically. If I had a loss in 2024, how do I estimate quarterly tax payments this year? Great question, Jennifer. I would just do it based on your projected income. Just take like 30% of that and divide it by 4 and make those payments. Or you could do it like for the quarter as well. You could take like, if you're using a bookkeeping software to track everything, take a look at your QuickBooks for the quarter once you've categorized everything and reconciled your books, and just see what your profit was. Take 30% of that, pay that amount in, and you'll be covered. Can you explain workman's compensation versus business liability insurance and financial requirements? Sandy, unfortunately not. That's not really my area of expertise, and the worst thing I can do is give you wrong information. I definitely don't want to do that. For questions like that, we usually defer to Gusto because they do have more like human resources than we do. Here at Collective, we're not an HR company. We're just solely focused on the tax, accounting, and payroll for the S Corp. So I apologize. I can't answer that question. I just don't want to give you incorrect information. Okay, right now I'm an insurance broker and file as a single sole prop. What would be a reasonable salary in the Chicago area? So that's a great question, Stephen. It's something that unfortunately I don't have enough information to really give you an answer. It is, like I said, a kind of a complicated process to calculate reasonable compensation. And it's something that they've literally been arguing about in court since like the 1940s. So it's something we can definitely help you with. We just would need more insights into your business's finances in order to give you a reasonable estimation of what that would look like. Rajiv is asking what is it 349 per month? What's included in that? Does it include annual state and federal tax filing? Yes, it does for the business. So the business S Corp returns for the federal and state are included in collectives services. The personal tax returns are not included. So those filings, if you did choose to go through collective for those are like an a la carte option, and they would um, cost an additional amount. Is there an amount that you should stay in LLC? Usually if you're under 60K in net profit. So again, take your revenue minus all of your business expenses. And if you're under that 60K in net profit, it's typically more beneficial to just stay in LLC. Frank is asking, does it include the tax filing at end of year? Is that an additional service? So again, it includes the business filings, not the personal. I have an S Corp in Florida. Is it better to register as a foreign entity in Nevada or just start a new LLC with S Corp designation? So, if you're moving to Nevada, you could do either. You could potentially even just redomesticate your existing S Corp to your new state. You could foreign register. And the only thing with that is that you technically, when you foreign register, have like two LLCs that you have to keep in compliance. You've got two annual reports. You've got, potentially two annual fees that you have to file. So it can become a bit of an administrative burden if you are foreign registering. So if it is a permanent move, then typically just a redomestication is going to be easier in the long run. Like a little bit more complicated to initially set up, but then it's like the headache is over, you're done. Thank you, Steve. Sarah will send out the recording in 24 hours. Sharon Wells, if you're an LLC and change to S Corp, do we stay as an LLC and file as an S Corp or actually change to an S Corp? So that's a great question. And I know it's super complicated. Like I said, none of this stuff is really very intuitive when it comes to taxes. So your underlying legal entity in this scenario you're asking about would stay as an LLC, but your tax status would change to S Corp taxation. So your LLC would all stay the same. You wouldn't have to change anything there. It's just how your business is taxed would be changing. Instead of being treated as a disregarded entity and being taxed as a sole prop, you would be taxed as an S Corp. How do you set up an S Corp? Can you do it mid-year? Is it equivalent to setting up an LLC? Great question, Denise. To set up an S Corp, you do first need to have a legal entity like an LLC in place. You can do it mid-year. You would file a form with the IRS. It's an S Corp election form. The form is the form 2553. You would sign that, send that in, and then the IRS will review it and they'll approve or reject the S Corp election. It's really, really rare that they reject them. So you would just set the date that you're requesting S Corp status. And remember, it can't pre-exist your LLC starting date. So, or the formation date. So you could request S Corp status back to a date where you already had your LLC in place. But yes, you can do it mid-year. You could even submit, like if you've had your LLC in place all year, You could submit a request for late election relief, asking the IRS to backdate your S Corp to January 1st of this year. Now, keep in mind, backdating does come with administrative burdens. You would need to catch up your bookkeeping, making sure everything is S Corp specific accounting for the year, which means you need not only a profit and loss, but a balance sheet to record your assets. And then you would also have to most likely run a payroll catch up, but it's totally doable. Sharon, I got this question, came up again. We already answered it. Jennifer's asking if I sign up for Collective and I find I no longer need it after a couple of months, can I cancel? Of course, we definitely don't hold you hostage here. We do, of course, we want our members to stay with us forever because we get attached to you guys. But yeah, if it's, if you feel that you don't need it, you're not locked in if you sign up with the monthly subscription. There's no contracts or long-term commitments. Now, we try to, kind of discourage folks from just signing up for the formation because that's something that you could really do, at another company like LegalZoom, for example, could do your LLC formation and even an S Corp election if you needed. Our services are just more kind of comprehensive, set for like long-term relationships. So that's typically, we typically don't prefer just being a short-term solution, but you're not locked in, if that helps to answer the question. Okay, haven't filed under the S Corp only with your LLC in Wisconsin. Yeah, so you just have to check with the state. You can just go to the Wisconsin Secretary of State website, pop in your business's name. It'll show if your business is no longer in good standing, and then you can just either contact the state or there may be um steps right there on the Secretary of State website that tell you exactly what you need to do to get back in good standing. Okay, could you describe the process for doing the bookkeeping? Yes, so the team does the bookkeeping on a monthly basis. They reconcile the previous month during the current month. So right now we're in kind of the middle of May. They're finishing reconciliations for our members' April books. So we have a connection with a live bank feed through Plaid. So it's a secure connection. Plaid pulls in your live bank feed. We also ask you to upload bank statements as well, and that's because no matter what bookkeeping software, those live bank feeds are not 100% reliable. Sometimes they are missing line items, and we want to make sure that you're getting credit for all of your expenses. So we compare the statements that you uploaded with the live bank feed. We make sure everything is there and accounted for. And then the team goes in and they categorize your transactions and reconcile your accounts every single month. Once they're done with the reconciliation, you get a notification that your financial reports are available on your dashboard and you can log in and review those. If you have any questions, you can send them over to us. Or if you notice, like if you have any feedback, you notice something is categorized incorrectly, you just let us know and the team will make the correction. Yes, we will email a link. Can I convert my C Corp to S Corp and what limitations are there? Can you assist with that? Yes, you can convert your C Corp to an S Corp. You would just file the S Corp election. A C Corp is the underlying legal entity, just like the LLC. So you would just be asking the IRS to tax your C Corp as an S Corp instead. Same limitations as for an LLC. Unfortunately, Collective cannot assist with that. We do only work with single member LLC based S Corps at this time. Okay. Excuse me. Saima, I created my LLC August of 24 and officially started January of 2025. I haven't filed anything. Should I wait next year? Or just bookkeeping right now is enough. I would love to pay myself as an S Corp, but I'm not making enough money yet. And I just use the income to reinvest into the business. Yeah, I would probably hold off until you're making a profit. It's totally normal that right now things are just ramping up, and you're just kind of like anything you make, you're just kind of reinvesting back into your business as it's starting up. So I would just say keep this kind of on the back burner, as like a goal to get to. And once you get to that 60K in net profit, it's a great time to maybe set up a call and explore S Corp taxation a little bit more. All right. I received my real estate license and will begin as an independent contractor. Is it better for me to start an LLC S Corp or remain a sole prop? Congratulations. That's a major accomplishment. Um, I would say it's typically going to be best to start with an LLC, and let me give you a couple reasons for that. Number one, it's a formal entity. So you're already putting that kind of separation between yourself and the business, which is a good habit. Number two, you get liability protection as an LLC. So not only do you get the heightened legitimacy from it being like a formal legal entity, you also get liability protection. And I would say you also get what's called tax flexibility, which means that you have, as an LLC, the flexibility to choose how your business is taxed. You don't get that with a sole proprietor. So, like, if you create a sole proprietorship right now, and then you get to December and you're like, oh my gosh, I've sold so many houses this year. I'm crushing it. I really want an S Corp election. You could backdate that S Corp election to your LLC formation date. But if you're a sole proprietor, you can't backdate at all because you have to have that LLC in place before you can elect S Corp status. So you get heightened legitimacy, you get liability protection, and you get tax flexibility with an LLC. Now, there typically can be a little fee with the state to form your LLC and potentially, like we said, an annual fee. Some states even have a franchise fee you have to pay every year. So you'd want to do your research and just do your due diligence, see what the fees would be to set up an LLC. And if you think that it's worth it, that's the option that I would choose just because I would want the benefits that come with an LLC. Thank you, Sandy. I appreciate you attending. Is there a business size that's too big for an S Corp? So, yes and no. I would say typically, I mean, it really depends on your business activity too. Typically, if you're making like millions and millions, like over 25 mil, you probably need to be a C Corp. Um, but yeah, at Collective, I would say most of our members are small to medium-sized businesses. So anywhere from really 60K to like 2 million-ish in net profit is generally what we see from our members. Can you move your S Corp to a different state easily? Great question, Lindsay. And something that can be really important if you're not like fully settled and you're considering moving. There are a bunch of different options for relocating your S Corp. So you can do a redomestication where you're actually moving the business. That one does require some work, but we do have a partner that can help with that. You can also always foreign register your LLC, which is super easy. Some states do like a merger. There's a lot of different options, and most of them we can help with. Does Collective manage state taxes? Yes, Johnny, great question. We do file state taxes. So if you come on board and you're an S Corp, we will file your business return, both federal and state. Rajiv, do you help real estate business setup? Yes, so like forming an LLC for your real estate business and electing that to be an S Corp, absolutely. We can help with that, no problem. Frank is asking, all the softwares mentioned are included, or do we have to pay for those subscriptions apart? Everything's all inclusive. So, like we just looked at, let me go back to this screen real quick. So with this, everything is all included. So like the gusto for your payroll, collective accounting, for the bookkeeping, and then the taxes, all of that's included. So yeah, you don't need to pay additionally for any subscriptions. Is Collective able to advise on the best state in which to form an LLC for tax purposes, such as Wyoming, Nevada, Florida, etc.? That's a great question, and it's a question that we get a lot. A lot of it is also kind of a common misconception of forming your LLC. A lot of states have kind of caught up to like Wyoming, Nevada, and Delaware in terms of being a little bit more business friendly. So typically you just want to form your LLC in your home state. And one of the reasons for that as well is that it's usually more of an administrative headache for you if you don't, because again, like we talked about with the foreign registration, then you're essentially having to keep up two LLCs. Because if you form your business in Wyoming, for instance, but you really live in California, you still have a requirement to register your business and file and pay taxes in California if you're living there and working there. You're considered to be transacting business in that state. And if you're not registered there, you're considered to be illegally transacting business in that state. And depending on what state you're in, it's more of a risk than others. Certain states are definitely more aggressive when it comes to this kind of stuff, but you are running the risk that the state could say, California could look at your return and say, okay, you're self-employed, but we don't have a business registered here. You're not paying taxes like we want you to. So we're gonna fine you until you register your business here. And if you don't do it, we can eventually take away your right to transact business in our state. So we typically recommend just registering in your home state to make it simple for you. So that way you're not having to worry about two annual reports, two filing fees, all of that. But if you do want to register in one of those other states, it would just be looking for things that are more important for you. Like some of the states, Delaware is known for privacy, basically. So if that's a major concern for you, you would just want to pick whichever state you feel most comfortable with, and then you can register in that state and then do a foreign registration in your home state. Julie is asking, can you give a ballpark estimate for personal taxes as an add-on? Yes. So currently there's kind of three packages for our personal taxes. The lowest one is $199, the middle one is $399, and the upper tier, if you have a really complicated personal tax situation, is $599. So anywhere from $200 to $600, depending on your tax situation. Okay. Melissa is a newbie business owner. Congratulations. Looks like you set up 2 weeks ago. As I set up, excuse me, as a single member business, learning all the statuses has me rethinking how I set up. This is for e-commerce. Well, Melissa, thank you so much for attending the webinar. So you said you set up the LLC before you created the store. So having the LLC is protecting. Okay. Yes, the LLC is giving you liability protection. Absolutely. So what I would say, since you just started, give it a little bit of time, see how things go. You've got your LLC, which is great infrastructure, so it's a great first step. See how things go, get a little bit of data, and then when you're ready, I would say book a call with one of our business advisors and just kind of talk to them about your situation. and they can let you know if they think an S Corp is a good move for you. Okay. Excuse me. My LLC is formed by myself and two C Corps. I cannot elect S Corp status for that. Would you suggest how to handle that situation? Well, if you're really wanting to be an S Corp, I would say just maybe start an LLC that's just owned by yourself and not owned by C Corps. Otherwise, unfortunately, this is just a little too complex. And again, like I said to the other participant, the worst thing I can do is give you wrong information. So unfortunately, I don't have a lot of suggestions on how to handle that other than, if you really do want to be an S Corp, just starting fresh with a brand new entity. I filed a deferment on 2024 taxes. Can you help with covering 2024? So you mean you filed an extension? Great. Unfortunately, 2024 would be out of scope for newer members, but we do have a partnership with a company. If you sign up with Collective, you can get a discount on them preparing 2024 taxes. How long does it take to get set up with Collective if you are already an LLC filing as an S Corp? Great question, Sandy. The onboarding process typically takes between 4 to 6 weeks. Sometimes unforeseen things pop up during onboarding, that can take some time to take care of everything. Otherwise, a lot of the time is just spent making sure everything is in compliance and all good with the state, and then also with our onboarding accountants, rebuilding your books back to your S Corp election date. Because if you already have an LLC, if you had it last year, most folks are coming on board with a retroactive S Corp election of 1/1/24. So that means that our team has to go back and rebuild your books as of January 1st. So that can just take some time. So just for the whole process, about 4 to 6 weeks, but please know that we are actively like working on your account during that whole time. Like you'll have meetings with your onboarding accountant. There's a kickoff webinar, like there's all kinds of stuff that's going on. So it's not like you're sitting there dormant. When I created my LLC, was I supposed to indicate on the application I wanted to be able to file as an S Corp? I didn't see that. Great question, Steve. It's actually a completely separate form. It's Form 2553 with the IRS that you would fill out for the S Corp election. Do you have staff to do the tax prep or do you do them yourself? Great question. So the business tax returns are prepared by Collective's team in-house. In the past, we've done personal returns in-house as well, but this year we actually did them through a partnership with another company. So not sure what we'll do next year, if we're going to keep the partnership or if we're going to pull them back in-house, but yes and no. My LLC is registered under a specific business category, but I also perform a variety of independent contractor work that isn't directly related. Wondering how that should be handled from a tax perspective. Okay. So, and that's a great question to kind of discuss more in depth with one of our business advisors on a call because they can get more information from you during that call. Um, it's really gonna depend. And I hate to say that, but if the revenue streams are major, then you may want to separate them. But I would say set up a call, talk to the team, give them more information, and then they could probably give you a better recommendation as far as like whether it's kind of okay to keep everything all in one LLC or they should be separated. Okay, and I think that's all the Q&A. Just going back through the chat to see if I missed anything. Bear with me, guys. Okay. Okay. Thanks, David. Is it hard to switch from personal LLC to S Corp? No, not at all. Walter, if you're still here, that's your question. It's not at all hard, and we can help you. No reasonable salary means it's too high, right? Oh, not reasonable salary. Typically, it would mean it was too low. The IRS is going to be perfectly fine if you want your reasonable salary to be higher than quote unquote reasonable, because that just means that you're paying them more taxes. So, reasonable for you would mean, hey, let's set it like as low as we can get away with. Reasonable for them is we're setting it as high as they'll allow. Okay. Is there a payroll software that does accounting and payroll? Julie asked that one. Julie QuickBooks does that. How do I determine reasonable salary when I'm starting out in consulting, with no precise forecast of total income? So Chandra, if you're not already an S Corp, I would say maybe hold off until you have a little bit more data. And then at that point, see how much you're going to be making. And then that would be a good time to determine if, an S Corp is going to be the best structure for you and what a reasonable salary for yourself should be. With our first, we went with a very low salary. Okay. Sorry, I'm just going through here. If you're paying payroll, do you have to pay quarterly taxes as well? Yes, Julie, you do, because while you do pay taxes on your payroll, those are withheld immediately from your payroll by Gusto, the payroll provider. That's only on the amount that's on salary. So say you're making 100K and you have 30K that's on salary. You're only paying taxes on that 30K, and the remaining 70K doesn't have any taxes being paid towards it. So that's what the quarterly taxes are paid, is to pay on the amount that's not on your salary. And then I see collective, or yeah, Sarah linked a blog. I was told if I saved my quarterly estimated taxes that the penalties aren't that high and that would be okay. Yep, that's totally fine. Some people like to put the money in like a high yield savings account, and in some cases that can outweigh the penalties. So, if you were given that advice, that is totally fine. Some people just don't plan for it. They don't make the payments and they don't set money aside for them. So that's where it can get rough, is, when you don't really plan for it and then you get a $10,000 tax bill that you really weren't expecting. It can be hard to catch up from there, and the penalties can get high. How come some people get penalties for not doing the estimated payments and some do not? So Frank, you will get penalties if you're required. So if you're self-employed and you're going to owe more than $1,000 when you file and you don't make estimated tax payments, you will get an underpayment penalty. There's no way to fight those penalties. Those are legitimate. What you could do, if it's your first time ever getting them, is you could request a first time abatement. The IRS could potentially do that, but otherwise, I mean, you could submit a penalty abatement request. But whether or not it gets approved is going to be determined based on whether or not you have reasonable cause for not making those payments. So like if you were very ill and you were incapacitated and nobody else was able to help you, that could potentially get you out of some penalties. But if you just didn't realize what the penalties would be, or you just didn't make them, there's unfortunately no way to get out of those. Federal self-employment tax, Janice, is what we're mainly discussing. Frank answered that already. Perfect. Raj, we can't send out a copy of the deck, but we will send out a copy of the recording. A diagram would be helpful to explain all these points because they're kind of confusing. Thank you for the feedback. We can definitely take that into consideration and maybe do a diagram in the deck going forward for the next one. What would be a reasonable salary? Does it depend on how much your company makes? Yes. Um, is there a limit on owner distribution? Could it be any amount? You still have full access to the money your business makes as an S Corp. We recommend keeping about 2 months of business expenses in your bank account. You can sock away some money for estimated tax payments in there, but other than that, there's no limit on distributions. You just don't want to take out more than your business earns. I only have one client and I'm the only employee. I did open an S Corp starting this year. The payment I receive is pretty much salary. I billed them for the hours work. Would this work for me? Yes, absolutely. Lizette, I would say to schedule a call with one of our business advisors and they can give you more tailored information based on your situation. Um, Zyra, yes. So you can take your reasonable salary and then take distributions as well. Distributions are meant to supplement salary and they are not a taxable event. So Lindsay kind of answered this question. Distributions aren't taxed at all. So you're taxed on your business profit with an S Corp. So if you make 100K, you're going to pay taxes on that 100K the year that you earn it, regardless of when you distribute it. So even if you kept 30K in your bank account until 2030, if you earned that money in 2025, you'll pay taxes on it on your 2025 tax return. Um, okay, so I see everybody is discussing distributions. I got to that question. The slides. What about a business that nets 400K? Is that too high for an S Corp? No, it is not. If I have two other owners and myself, can I use an S Corp? Yes, James. You can. Collective, however, only works with single owner S Corps. Can I transition mid-year from sole prop to S Corp? Yes, I believe I answered that previously. Um, Can a single member LLC apply for S Corp status while using personal social security number without an EIN? You want to get an EIN, Arlene. We can help with that too. If you come on board with no EIN, we'd get an EIN and then we'd do the S Corp election under your business name and EIN. Still in the business development stages of my business and will not have any profits this year. Should I wait till January? Yeah, I would wait. If you're not going to have any profit this year, then there's not really a point, Zaria, I'm sorry, in electing S Corp now. I would just wait and finish out this year, um, as you are, and then in January or maybe even in December, kind of get prepared for what next year is going to look like. But I would just wait. What is your competitive advantage compared with other products like Gusto, ADP, QuickBooks, etc.? Great question, Raj. So, number one, it's going to be that everything is all in one place. So, like if you're just using Gusto, they're great. They're fantastic, but they're payroll. You would also have to get a bookkeeping software. You would also need to pay somebody else to file your taxes for you. And then if you need advice throughout the year, you're having to pay somebody else too. So you're really kind of cobbling together different, a bunch of different services. Typically, it works out to be cheaper to just go with like an all-in-one service like Collective, and our business advisors have a bunch of comparisons that they could share with you on how we're really cost effective. We're the most cost effective solution on the market. And a major advantage is somebody like myself, not your member relationship manager, basically. My role here at Collective, like I mentioned, every single one of our members gets a dedicated account manager, a member relationship manager. That is a credentialed tax professional that you can just hop on a Zoom call with and ask questions. That's a huge advantage compared to those other companies where, yes, they have great self-help tools, but you're kind of flying flying blind. So collective's kind of in the middle of like, yes, our platform is a lot of like self-help, but you have a team of financial experts behind you, backing you up that can help. If you make a mistake, we can help correct it, or you can ask questions to, whereas like a CPA that gives more of that white glove service is just a ridiculously high retainer. We're just kind of in the middle. We're affordable, and you get a lot of support. So I think that's one of the main things that sets us apart. Total noob. It's okay, David. Sounds like the S Corp election can't be recaptured for past years by redoing a few years of returns. It can. So if you had an LLC in place and an S Corp election makes sense for you in previous years, you can go back. Oh, I think it's 3 years that you can do. We don't go back that far at Collective because it is a major administrative headache because you would have to make the S Corp election. You would have to file S Corp returns for all of those years. And then you would also have to amend all of your personal returns for those years as well. So you would really want to have probably a CPA kind of evaluate the like cost benefit, like how much would it actually save you, um backdating for multiple years versus how much are they going to charge you to do all of that work, because it's a lot, but it is possible. What about for multiple businesses? Absolutely, you can have multiple S corps. Um, Tate asked for the pricing slide. We're there now. Sorry. I think I answered that one. Can payroll taxes be done quarterly? Yeah, you can absolutely run payroll quarterly. You don't have to run it every month. That's typically what we recommend and what a lot of our members prefer, but you can absolutely run it quarterly. Some people do like one payroll a year, so it's just whatever works for you. Is it better to open an LLC with the S Corp tax option attached? Also, if income is inconsistent, does this even make sense? So, no, you definitely don't need to immediately start as an S Corp. You can always just operate as an LLC. And then if an S Corp election does make sense down the line, you can you can elect to be taxed as an S Corp. If income is inconsistent, it's okay as long as you're at a place where you're consistently kind of making at least over 60K when everything is said and done. If your income could be 60K one year, 30K the next, 40K the next, 50K the next, you may just want to wait until you're consistently above 60K. Is there a fee or penalty if I pay a percentage or the majority of amount of quarterly taxes instead of the full amount each quarter? Great question. There could be a underpayment penalty when everything is said and done, when they're assessing the payments that you've made in through the year. If there's a significant underpayment, you could pay an underpayment penalty, but it's usually like really low. It's like 0.5%. So, it's always better to pay something than to pay nothing, because the failure to file penalties wouldn't be present if you made a payment. There may just be an underpayment penalty. S Corp needs to be filed before March 15th to be valid in 25. Thank you, Stephen. The IRS does give you 75 days to file a timely S Corp election, but you can always petition for late election relief. I've never seen them deny one. We send them in all the time. So you can always do a retroactive S Corp election. Thanks, Janice. Will do. What does the collective provide to me as a private practice psychologist? So just everything that we went over in our services package, the bookkeeping, the formation, tax preparation, payroll, all of that. Okay, let's see here. LLC was created because of personal taxation. Okay. For short-term rentals, is recommended to get an LLC? We're starting with S Corp sounds better, as we won't have much earnings mid-year. What do you recommend? Uh, yeah, it can be a great option. Um, as long as you're making over the 60K per year. Rental income can be a little bit tricky as far as whether it's considered active or passive. And S Corp tax savings are only on active business activity. So you may just want to confirm with a accountant, like if you can give them more details about your situation or set up a call with one of our business advisors and give them more details about your situation, they may be able to make a recommendation. Nico, do you charge more if I have multiple companies? Yes, so each company would need its own subscription. So if you have multiple businesses, then you would just have multiple, you'd have like two, three, however many you want to set up, multiple subscriptions with Collective. How can I get a job as a bookkeeper in your firm? I'm impressed with the service you offer and would love to be a part of it. Well, Donna, that's a great question. You can head over to our careers page. And if we have any openings, you can just, whenever we have an opening for a bookkeeper, you can fill out an application to be one of our onboarding accountants or an accounting advisor. When I created my LLC, no, we already answered that one. Okay, how far can you backdate an LLC or S Corp if I went from sole proprietor to S Corp now? Would I be able to apply that for the calendar year? So yes, you would, but because you're a sole proprietor and you don't have an underlying legal entity, your S Corp election date would have to be like the furthest you could go back would be your LLC formation date. So if you form your LLC tomorrow on May 14th, then you could do your S Corp election date on May 14th as well. And then our team, if you signed up with Collective, would rebuild your books and count any activity from the first of the month of your S Corp election date. So May 1st, we would count any activity from May 1st forward as S Corp activity. Um, what state should LLL be filed? Stephen, can you clarify that question? I'm sorry. Um, okay, a lot of people still under sole prop. Perfect. Okay, great question, Charlotte. So you don't want to count the gross income. You want to count the net income. So you want to take your gross total revenue minus all of your business expenses. So like your subscriptions, your mileage, all that stuff. And then the number that you're left with, your net profit, you want that to be over 60K before moving forward into an S Corp election. Um, okay. Let's see, David. Ooh, wow, David, congratulations. Let's see. Well, okay, so join late, gross income was 33K, but I've made 147K this year. Congrats again. No idea how long this will continue. Does it make sense to form an S Corp for this year? Not knowing if my income will continue at this level in the future. I'm a sole prop. So being that you're a sole prop, that's the most important factor in this, because if you've already made 147K as a sole prop, that can't be roped into your LLC slash S Corp books because it's already considered sole proprietorship business activity. Um, if you think that for the rest of the year and potentially next year, you would be above the 60K, then I would say go for it. I mean, at the very least, if your income has the ability to fluctuate that much, at the very least, it may make sense to just set up an LLC. That way you have that tax flexibility. I know you joined late, and I can go over that again really quickly with With an LLC, you have something called tax flexibility that you don't have with a sole proprietorship, where you can choose how you're taxed. So if you have an LLC in place and like, say you had an LLC already and you're like, holy crap, I've made 147K this year already. You could backdate that S Corp election to the beginning of the year. So that way all of that 147K could be included as S Corp activity, but because it's been paid to you as a sole prop, unfortunately, it's not eligible to be S Corp activity. So it's really going to depend on how you think the rest of the year is going to play out. I would say setting up an LLC, like do some research, see if that sounds like a good option for you, and maybe set up an LLC so that way you have the flexibility in the future if things do change. Okay. Monthly income will vary month to month. Not sure how to give myself a fixed monthly salary and collect payroll taxes every pay period. Chandra, that makes total sense. If you want to pay yourself quarterly, you can do that instead if that's easier. Um, or we have some members, I have a member that I meet with every month and we run payroll based on her income that month. Because she has, the large fluctuations too. So there's a lot of things that we can do to work around. It's definitely not a deal breaker. Okay. Kristen, yes. For multiple businesses, each business would need to have its own subscription, so it would be 2 times. How far can you do an S Corp election if you're going from sole prop to S Corp? So just to the LLC formation date, Amanda. You can't backdate it further than that because you do have to have a legal entity like an LLC in place to elect to tax S Corp. Okay, and then I think I saw a couple more questions back in the Q&A. Looks like we're almost done, guys. How do you contact someone for errors or questions once you already on board? Do you get a personal contact for your business or whoever in the team takes over? Is it by phone call or only email? So great question, Frank. You would reach out to your member relationship manager, and that's what I do. So I have a book of business with members that I am their dedicated account manager. So if they have any questions, if they notice a mistake in their bookkeeping, they can just shoot me a message directly from their platform. We have a little messaging center. You can just go on and say, hey, I noticed this transaction on this date was coded as office supplies and it really should be meals or whatever the case. Shoot that to me. I'll loop in the accounting team. We'll take care of it. We'll get it fixed. If you want to hop on a call, you can schedule a Zoom call with me and we can chat about your questions. So we do both. We do messages and we do phone calls. Is there a salary threshold that an S Corp would not benefit? A salary threshold an S Corp would not benefit. Do you mean like if you have an outside W-2 job with a high, if you do have an outside W-2 job with a very high salary, um, it could not be as beneficial to have an S Corp, but that's going to be on a really case by case basis. And it's just because of how the FICA taxes and the savings, the S Corp savings work. So I would say schedule a call with one of our advisors and they can let you know if it makes sense for you, basically. If I receive 1099 income and pay more than 1,000 in taxes, will I be penalized? For not paying estimated tax payments? Yes. You're considered self-employed, and if you are going to owe more than 1,000, you will be penalized if you don't make those payments. Again, the penalties are not super extreme. If you want to plan for it and set the money aside in a high yield savings account, if that's going to outweigh the penalties, that's totally fine. If that's how you want to go about it, just be aware, plan for it, know that the penalties will be assessed if you don't make those estimated tax payments. Hate to be the bearer of bad news, but Uncle Sam wants his money. It's like the ultimate mob. They're gonna get their money. All right. Um, okay, great, David. Thank you. Thank you so much, everybody. For attending, yes, David, that's perfect. You can totally wait to set up a call with us at any time it works. Thank you everybody so much for attending. Thank you for your questions, especially if you folks hung around this long. We really appreciate your engagement and your interest in S Corps and Collective. So thank you all so much. Again, Sarah will be sending out a copy of the recording within 24 hours. Um, so yeah, we hope to see some of you as members in the future, scheduling calls with our business advisors. We are super excited about the prospect of working with you. So thank you again. Hope everybody has a great week. Take care. Bye.